I feel like risk is just a part of the stock market. You just have to assume it. But how do you take that and then apply that every single day with every single trade?
It is a little bit of an art where you have to be aware of things. It's always a game of balancing out how much I'm getting back for the amount of risk that I'm taking. And that's probably where most people have a challenge. They might be very aware of how much money they could make, but they're sort of vague on how much they could lose. They know that maybe I could lose everything, but that doesn't seem too likely. And so they'll brush that aside. So we have to have a way of estimating and measuring exactly how much we might lose given certain events inside the market. And how big or how terrible those events that we should be anticipating is where the art comes in. So you hear about stress tests. You have the government requires banks to stress test their portfolios. That stress test is a kind of a basket of things that might go wrong and how would your portfolio perform in that case. And then if I'm trying to add in a new trade to my portfolio, how that changes the entire mix of it. It's just a lot of calculations, a lot of tracking of different parameters, and you have to define those parameters very carefully in order to be aware of the different dangers and different risks.